Welcome to Wealth Coffee Chats, folks, for your daily live updates. Get the most out of today's episode by participating in the chat. Make sure you ask some questions, be part of the conversation, have a bit of fun, grab a coffee or a tea, take some notes, and get ready to start your day, folks. Quick few housekeeping rules, though. No spamming, no advertising or self-promotion in the chat. That's not on. Be kind and respectful to everyone when participating. And most of all, have a good time. Real estate investing can be your biggest asset. It also can be your most expensive asset when it comes to getting it right or getting it wrong, folks. It can be time-consuming, stressful, and that's why here at Positive, we have what's called a 6-star team, a full-service team that provides integrated wealth and property investing solutions and services simply designed to help you progress towards your goal of passive income through your property portfolio, folks. Make sure you check out our other podcasts on the Positive Mentor Network. Not only is there Wealth Coffee Chats, there's the Urban Property Investor. Drops every Wednesday with straight talking investing strategies and lessons with Sam Saggers. Property Investor Tales. This is where our clients, you guys, share real life stories from property investing, hosted by some of our advisors and strategists. And that's done every fortnight, dropping every Monday. Wealth, Wine and Wisdom, folks, that debriefs the week that was in the world of finance and property, hosted by yours truly, Jason Witten and Andy Fenton on Fridays. Welcome to another Wealth Coffee Chat. Marvellous Monday. Hope you're well, folks, wherever you are. If you think it's Get Rich Quick, you're in the wrong place. This is the wrong podcast. This is the wrong live for you. Welcome to another Wealth Coffee Chat. Hope you're all awesome and well.
Morning, everybody. Welcome to another edition of Friday Finance. Also, good evening to those joining us from the other side of the world. Kevin, I would actually like to start today with a finance joke, so I'll get everybody just to bear with me. Why did the banker switch careers? Because she lost interest. Today's topic is around the interest rate cuts and when interest rates are expected to be falling in the Australian banking system. Currently, the interest rates are based around our inflation, and the RBA want our inflation to be between 2 to 3%. And it's currently sitting at 3.6%. So it's close, but we're not quite there yet. Now, the major banks, CBA, are saying that rate cuts most likely will be coming around November. Westpac and NAB are seeing that rates would most likely be coming down in December this year. And ANZ don't expect rate cuts until 2025. Even if rate cuts do come in at the end of this year, it most likely won't get passed on to consumers until next year. As you know, RBA cut the interest rates, and then the banks take a couple of months to filter the interest rate cuts to their clients. Yet when we have interest rate hikes, it almost happens instantaneously. So there's always the joys of waiting for banks to cut your interest rates. Now, in the meantime, what I recommend my clients do is always keep an eye on your interest rate and also what's available in the market, because we don't always necessarily need to refinance. What we can do is we can actually ask the banks to review your interest rate, whether you do it yourself or whether you get your broker to do it. And most of the time, the banks will come back with an offer. Now, just keep in mind that you can't continuously do that every month. Some banks require you to wait 6 months before they will actually review your interest rate again. So book it in and make sure that at least it's, I would say, between 3 to 6 months that you take the opportunity to go back and talk to your lender about your current interest rate. Now, in the June statement from the RBA, they did make a statement, they did make a comment around not ruling anything in or out. Basically, what that means is that they're reminding us that there is no rate cut guaranteed, and there could be another rate hike before the rate cuts come into play. So a couple of actual tips that I actually wanted to share with everybody today when it comes to borrowing. The first tip is the difference between principal and interest versus interest only, and what impact it has on your ability to borrow. Now, in the past, what we've been able to do for a lot of investing clients is that we've been able to look at getting interest-only loans for their investment properties, and getting the interest-only loans has not affected their ability to borrow. But since the review on the broking industry, what banks have had to do is that for interest-only loans now, they need to be assessed based on the remaining term. What that means is if you're applying for a loan for 30 years and you want 5 years interest only, then they will assess the loan based on the remaining 25 years. So in the past, they would have just assessed it on the 30 years, but by reducing the loan term to 25 years, it actually affects how much you can actually borrow. So what happens then is that you need to make a decision on whether paying principal and interest, how that affects your cash flow against the interest only, which will affect how much you can actually borrow. Okay, so there is that balance, and obviously, have a chat to your broker to find out to play out both scenarios and work out what's actually going to be most effective for you. The other tip I want to actually share is that we've had clients who've had multiple loans, up to 5, 6 different loan splits based on having multiple investment properties. When we talk to the banks about servicing, all of these existing loans get assessed at a higher interest rate with higher repayments for most of the lenders. What is available in the market is that lenders who will assess all your existing loans based on actual repayments. Now, actual repayments could be interest only as well if you've got interest only loans. Now, you can imagine if you've got between 4 to 10 splits on your loan, those loan repayments make a huge impact on your lending capacity. So I would recommend that you have a conversation with your brokers to find out what lenders are available that will assess your current home loan rates at actual repayments and check the interest rate they're actually offering. Now, most of the time, the interest rate might be slightly higher than what's available in the market. But if that means that you can actually borrow more from them, then that is actually going to help you achieve your goals. What I always tell my clients is that when we talk about borrowing, we talk about trying to find a solution that's going to help you achieve your goal. That's the first thing we talk about. And we talk about interest rate last, because if the loans we're talking about cannot help you achieve the goal that you want to achieve by taking out the loan, then there's no need to actually have a conversation about interest rates. Tim's got a couple of questions. Morning, Tim. I ask sometimes 3, but every 6 months, usually at a minimum for review. Tim, I know that some lenders usually don't always give you the review that you want in terms of the interest rate. What I have noticed is that if you were to ask for a discharge form, in some cases, you then get to talk to the discharge of the bank's retention team. And once you talk to the bank's retention team, there is an additional, there can be the ability to negotiate better rates with them as opposed to going through your broker or just contacting the client support team. Have a scenario of 7.19, interest only is lower than 7.09. Not quite sure about that question, Tim. So I have a scenario of 7.49 interest only is lower than 7.09 principal and interest. Okay, I think I can loop back to Tim in regards to those scenarios. But yeah, like those are my tips when it comes to getting a better understanding repayments per month. Yeah, generally the interest-only repayments are actually going to be lower than the principal and interest repayments, Tim, because the interest-only loans, you only have to pay the interest portion, whereas the principal and interest has the principal and interest, the principal portion as well as the interest portion. That's really the reason why the repayments would be higher, even though the interest rate is lower. So yeah, I just wanted to share a few of those tips that we experience, that we can see as brokers, so that you guys can have a better understanding of what banks look at and what different lenders look at when it comes to working out how much you can actually borrow to be able to buy more. Being able to borrow so that you could either buy your home or be able to be in a position to purchase your investment properties. I wish everybody a happy Friday and a wonderful weekend, and I look forward to catching up with you next week. If you haven't already, like and subscribe.
Episode of Wealth Coffee Chat, folks. Make sure you like, subscribe, and turn on your notifications so you never miss a thing when we go live. Improve your portfolio and investing game, folks, with Wealth Coffee Chats live every morning at 8:10 each weekday. Make sure you join us. Previous episodes are also available wherever you get your podcasts, folks, as well as our other podcasts from the 6 Star team here at positivementor.com.au.